Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you all had a wonderful weekend. We were absent. We didn't do our daily cryptocurrency market updates this weekend. And I think really the reason for this is because I'm not really wanting to trade the weekend markets for crypto. It's very low volume and boring at the moment. It's a real shame. So I'm not necessarily watching the chart as much over, or looking at the charts as much over the weekend. And I think this has quite a lot to do with the fact that the traditional markets close over the weekend. And that for me right now, a lot of my trading is centered around what other markets are doing. And that gives me the kind of foresight potentially into what the cryptocurrency market does. Last night, for example, we closed a number of shorts. Reason being was because the GBP USD pair was up, which means it looked potentially like the dollar was going to see some weakness. The dollar has since found its strength, and we are going to be discussing that in this video. This dollar strength has been relentless. And the longer this persists, and we do expect it to persist, the worse it kind of gets for the cryptocurrency space. We have done so much on this channel in terms of really trying to educate people on the very concept of liquidity, how it drives markets, and the reasons why the environment that we're in are very liquidity restrictive and actually regressive to the risk on asset class. And we've seen the results of interest rate hikes and inflation thus far. And inflation is going to stay persistently high and interest rates are going to increase. And we did a whole breakdown of why this is just insanity, what's going on at the moment. And in my opinion, is very detrimental for markets. And we are heading into a recession that I think is still to see crypto lose its value. The stock market loses value. Even things like gold, silver, equities generally to all lose their value as liquidity is getting sucked up via the central banks and interest rate hikes. So just something for me to kind of reiterate, like I do on all these videos. It's going to be a really big week. We have a lot of company earnings. We've got none today. On Tuesday, we've got the likes of Coca-Cola, General Electric, General Motors. We've got Alphabet, so Google, Alphabet A. We've got Microsoft, Spotify. We've got Visa. And then we've got things like Boeing on the Wednesday, McDonald's. Major companies. I think this actually makes up a large part of the S&P. So what those earnings do is going to affect what happens with the S&P. And you guys will know that I think the S&P is very much just following 2008's trajectory. So I think we're essentially doing something similar to what we did in 2008 after having this huge printathon, all this liquidity thrown into markets. Now, I think effectively we're very much just following the script here. And I think you can see that. And does that mean that we have some sort of, I mean, we're literally following this to a T. If we line these up perfectly, you know, you can see that we are literally following 2008's trajectory. So I still think that we've got a serious drop to come. Does it take out and erase all of the gains that we saw after March 2020 onwards? Potentially, I don't think so. I think we certainly end up where we were prior to March 2020 spill and potentially into it a little bit. And this is the S&P. We know what the correlation between the S&P and, of course, Bitcoin and the wider markets are. I think the dollar and its strength is really going to support this. You can see how in sync these kind of move. And I think the dollar is going to support this. And I think the dollar continues to go up based on the fact that it is going to eat other currencies' lunch. And this is the most important chart to watch, is the Dixie, which is why I'm not really feeling trading on the weekend. Now, this is squeezing, in my opinion. This has been an area of significance for us for a while now. We can now extend that, and you're now holding it. So we are still biased that the dollar sees more upside. It's a really hard call at the moment because we've obviously ran into this resistance above us, which is prior price action from 2001 was the last time the dollar was up here. We actually got into that zone. We're now finding this resistance. The question for me is, do we see more of an extended pullback, or does the dollar just reset here? And it looks like you're squeezing for that decision. You did break up here. We did call this break, but you've actually since come back, retraced, and you're now finding this sort of area of significance. It's midpoint is what I'm calling it. That if you hold, you may see that continuation to the upside, which means that Bitcoin and the risk asset classes will be going down. Really, for the stock market, like I say, a lot of what makes up the S&P as an index is coming out this week and giving their earnings. So you are going to see movements there. There's also a number of interest rate hike decisions, I think from the ECB and a number of other central banks like the Bank of Canada that will affect the DXY and its strength. So it's going to be a week of watching data. If I was to bias today, which way I think the market's going, I really don't have that much of a good feel. You know, I think the dollar strength, of course, is negative. I think the futures market isn't telling us a lot. The UK markets have opened down generally. Gold selling off, you know, oil selling off, wheat selling off. So does that mean that crypto is going to sell off with it? Potentially. We did see a breakout here. And I think this was on the back of the intrabank rates that came out yesterday, which saw a lot of pairs actually gain strength against the dollar. And people would essentially go, okay, well, that's good for risk. Potentially why we got this positioning and this kind of rally that we got yesterday. This is the 1 hour chart for Bitcoin. But does that just erase like every other time? Could indeed do so. This is not, I mean, this is the most boring market, you know, that there is right now. And you can see, really, you're just in a range here. Let's get rid of these for Bitcoin on the 1 hourly chart. I don't know where you want to draw your range. You could even make it a bit more of a tight range. So when you actually slipped into this range and you're sort of at this midpoint at the moment. So range traders will love this. They'll basically, you know, you hold this, they'll take the long. You lose this, they'll take the short, and you're probably going to see that price action. But what's really going to drive this and cause those traders to rush into positions and drive the price either down here or up here is really going to be what the DXY does and positioning around other markets. And the DXY, like I say, for now is actually holding and looks prime. This is one of my favorite things to trade, is when you have a kind of double bottom scenario. Let's get rid of all these draws. This is the Dixie, by the way, guys. A kind of double bottom scenario, but where you actually put in, it's almost like, how's the best way for me to put this? You're starting a new trend of higher highs and higher lows, you know, and then maybe you get that rip to the upside. So that would be very detrimental for the crypto space. There is reasoning for the Dixie to actually show a bit of weakness here. It's kind of due a more prolonged pullback. But one thing that I've got to say on that is I don't think it's worth betting on it, because it's shown us that it doesn't really care. You know, ultimately, I don't think this is the bottom for crypto. And really for the reasons that I mentioned at the start of the video, I still think there's a lot more downside to be had. And people always throw the argument, well, it's already seen significant downside. Yes, Bitcoin has, but it's not actually seen downside that is unprecedented from any other bear market. So in my opinion, Bitcoin has never had to deal with this sort of recessionary environment where liquidity is getting scooped up and going back into the debt markets that can never repay themselves off. And in actual fact, it's like a death spiral, because the more you up interest rates, the more dollars you need, the scarcer those dollars become, and the more debt you almost have to kind of issue to keep everything afloat. So in an inflationary system, trying to fight inflation of the dollar in terms of supply is naive. What they're trying to do is essentially bring everything else down in line with the amount of inflation they printed. So it's a demand destructive cycle that we're in. You also had, I think it was leaked actually. This is to do with the Asian markets, which opened down today, which is interesting because China's growth actually seemed rather decent. The Fed, I believe, or there was something about a leak of the fact that they were in the next meeting going to do a 75 basis point interest rate hike. We can probably see that actually in the federal funds rate. Yeah. So you can see that this is spilt. And this is because the Fed are going to continue to get aggressive. In order for me, and one bottom signal and some alpha that I will give people is, you know, for me, I want this to start coming back up before I even start getting into markets, showing that that sort of monetary pressure we're under is relieving. So it's going to be an interesting day, that's for sure. So far, I think really we're just waiting for the futures market to open. Sorry, not the futures market, the actual stock market in the US to open. Tomorrow is going to be telling, and certainly a interesting day. These are lagging earnings, so these won't be the most, you know, recent earnings. They'll be the prior ones, not the earnings that they're currently on. So maybe they do better than expected, and that sees a little rally for the stock market. Maybe they don't. It's very hard to sort of predict these things, but whatever sort of earnings come out for these companies, I think is really, given how much of the S&P they make up, going to move the stock market. Crypto is likely to follow along, but we're all right now dancing to the dollar's tune. We are seeing a bit of a it was quite down this morning, but we're seeing a bit of a rally since, as we see people start to wake up and start to trade this. So we'll see. Going to be a very, very interesting day. There's lots going on at the moment in terms of sort of geopolitical stuff. I can't stress this enough, guys. For me right now, it is literally all about the dollar and what the dollar does. And if the dollar continues to see that strength, you're at historical levels here. Do you rip straight through it? I would expect some sort of a pullback, some sort of a prolonged pullback here. This is kind of what I'm expecting. It doesn't have to get here, though. Could it pull back here? These are scenarios I'm looking for. If it rips, you're essentially going to want to short crypto. If it actually starts to have a prolonged period of rest, you can essentially take those longs, as you won't have the burden of a very strong dollar against you. I also want to stress this point that it is extremely unprecedented, a lot of the things that we're going through right now, and it's very much set to get worse. I don't want this to depress people. This is the situation we're in, and we've got to deal with it. And ultimately, that's going to provide amazing opportunities moving forwards if you are there to capitalize on them. So just to really finish off on Bitcoin, we still don't think this is the bottom. We think right now you're just boring range trading. I hate this trading. It's not my market. I'm more of a... I flourish in trending markets, whether it's up or down. I don't care. In fact, I'm a native short seller. I prefer to short than I do long. It comes a lot more naturally to me. But this is just sideways chip chop markets. And until you really get some sort of a decisive break, you either get back above 21K or you convincingly come back below sort of 1850. So 18,500. You're just going to be trapped in a range. But one thing I do think is you get some sort of I don't think that's a scenario, but I do think you're going to get some sort of a impulsive move based on just how long you've been consolidating here. Let's take a look at the volume. Don't use Binance's volume, guys. It's so much. Volume for crypto actually is... There's a huge argument out there that, is volume analysis really that useful now that you've got all these bots and sort of wash trading going on? It is. It just amplifies the overall number of the overall amount of volume that's traded. But you can still typically see the still typically see what you're looking at. So this is KuCoin, which has really low volatility, and this is Bitstamp, which we could probably use. Get rid of our rainbow chart. I'm not seeing interest here, to be honest, across the board. And I still think that actually this is very much an intact downtrend, in my opinion. Forget the demand index. If we look at your RSI, this is very much an intact downtrend, guys. I'm not seeing any sort of reasons to be bullish here at all. So we're going to keep on keeping on until we see reason not to. That means we're expecting further downside. Today, it's really anybody's guess what happens today. We are going to try and trade it, but to what success, I suppose, later on today we'll find out. It's going to be interesting. That is really all I've got for you in this video. Big week in terms of news coming out from central banks. Also, big week in terms of the stock market. It's going to be an interesting one, guys. You guys should all be prepared for it after watching this video. If you've enjoyed this content, a like is always appreciated. So, a comment, and I look forward to seeing each and every one of you in the next one. Have an amazing week, guys.